So let's start with Reinet Investments. Now, this one is a big cap on our market. It was created in 2008. Remember, with the reorganization of the Remgro-Richemont British American Tobacco Group, what the Ruperts had brought into being, they split it all up. And Reinet emerged then as a European-based entity with a big slug of British American Tobacco shares in a residual vehicle. It's got a management agreement, though, with the Rupert Family Investment Company. Rowan can clarify and crystallize those details for us. And they've taken some of the free cash flows that they've derived from the BAT holding and sunk those into some other financial services type and property type investments. But when I say it's big cap, 62.6 billion rands worth of market value. Price earnings ratio of only 5. I wonder why that's so low. Dividends rather measly, 0.73. So Rowan, describe to us what's going on here. You said you own some of these in your fund.
Yeah, so essentially what you've said is correct. There's a separate management company that sits outside of that listed vehicle that charges management fees to manage the assets
and
of that
that's
vehicle.
on a 10% above a benchmark, and it takes the NAV of Reinet in euros, and if it goes up, then they help themselves to 10% of that gain.
Yeah, that's right. Yeah,
which
it's
is
actually
a nice deal.
It's listed in Luxembourg as well, and that's the reference
So even
price.
if British American Tobacco's price just goes up a bit, they be making.
Yes, absolutely. And I think that's what investors, initially what happened was there was a restriction due to foreign exchange around holding the BAT shares that were listed on the JSE. So a lot of the investors, local-based investors, had to hold Reinet if they wanted to hold BTI. That reversed at some point in time, and the discount widened significantly. It sits at around 30%, which really reflects that fee structure.
Just explain that. So if you like British American Tobacco, rather than buying them locally on the exchange, you can buy Reinet, which owns a lot of them, and you're getting this discount, and in time you'd hope that would close.
Yes, yeah. So the discount currently reflects, I guess, the cost of the holding structure, but specifically the present value of that fee structure, which is 1 in 10 essentially. I guess there is some optionality around it that at some point in time they may reduce that fee structure.
But you wouldn't probably own these only for that. You would presumably own them if you thought that they were going to do something really exceptional, and Johan Rupert has a success story that goes back many decades. So what are they doing outside of the BAT holding that is exciting?
Yeah, so that's exactly, you're buying into the Rupert investment prowess and track record. And I guess, so they have been diversifying away from that BAT holding. So they have the other significant asset is about 15% of their NAV is a business called Pens Corp, which is a UK-based life insurance business group, which is actually taking over the pensions liabilities of large UK corporates and managing those. And that has had
so a deal like a big company like, I don't know, British Telecom or someone would say to them, listen, you guys buy out from us the obligation to take over this pension administration and you deal with the people.
Correct, exactly. And so that is quite capital intensive, so they've been able to deploy a lot of capital there. And then if they can manage the whole liability more effectively, they can essentially make a profit. So it's been performing well. It's had decent write-ups in its NAV, and that has helped the growth of
Let's have a look
Reinet.
at the share chart of Reinet. Now, it's also benefited from the weakening rand and the rising price of British American Tobacco in London, and everything looks good. So I suppose if you didn't like them because you didn't like BAT, like me, then you've been a fool, because look how well this one has done over time.
Yes, I mean, the underlying investment case is still largely driven by BAT, but I think you're getting BAT plus, as you said, some sort of excitement. And they've also got some private equity investments, which have done generally well through the cycle. So, and the discount, I think, is at the widest largely it's going to be. It's not going to go wide. It may go a little bit wider than the current around 30%, but there is a chance that it could narrow a bit. So it's your classic value based investment.
So, hot or not? Rand-based investors, here it is, trading at the current level. You can pick them up today.
Yeah. So
you like them?
Yeah. I think BAT is much more fully priced, but with the underpin of cheap money, I think it will continue to be fairly strong. It's a very safe investment. I can recommend it. Yeah, hot.
I can't bring myself to do that. I'm going not hot.